Hello and welcome to this special broadcast. I'm Shireen Bhan. The Modi government is completing 9 years in power. The country currently ranks among the fastest growing economies in the world, especially in the post-pandemic era. In January this year, the RBI said India would become a $3.7 trillion economy by the end of 23, maintaining its lead over the UK as the fifth largest economy in the world. The government aspires to make India a $5 trillion economy by FY27. So here's a closer look at some of the key economic parameters and how they've moved in the last 9 years. Inflation, which has been a concern of late and prompted the Reserve Bank to hike rates rather sharply. After holding rates steady at 4% for over 23 months, the RBI implemented rapid rate hikes, taking the repo rate to 6.5% in a span of just 10 months. But even now, repo rates are lower than the 8% levels seen in early 2014. Inflation itself is also much lower than it was 9 years ago. From a peak of above 11% in late 2013, retail inflation or CPI inflation dropped to a low of about 2%. It has not gone back above 8% since, despite a sharp rise in late 2019 and for the better part of 2020. As India and the rest of the world battled a global pandemic, the Russia-Ukraine war, whose rumbling started in late January of 2022, sparking another spike in inflation, but this was not unique to India. Since September of 2022, inflation has been slipping in keeping with the Reserve Bank's rate hikes, and the last reading stood at an 18-month low of 4.7%. The RBI says it's poised to act with more rate hikes should external factors warrant further rate action. Now, GDP. India's GDP in absolute terms has also grown over the period. From a little over $2 trillion in 2014, it's estimated to hit $3.73 trillion by 2023 end. Growth rate, however, has been far from steady. From 8.2% growth in FY16, growth rate slipped steadily to 4.5% in FY19 and 3.7% in FY20, even contracting by 6.6% in FY21. Of course, these 3 years were also the years when the economy felt the strain of the pandemic-related lockdowns, freezing nearly all economic activity in the country. The India story has not been lost on the rest of the world. Foreign direct investment into India jumping from $36 billion in FY14 to $45 billion in FY15. FDI inflows spiked up to over $83 billion in FY22. But there are concerns as well. In May 2019, the government's Labour Department confirmed that India's unemployment had peaked to a 45-year high. The data released by the Labour Ministry showed 7.8% of all employable urban youth being jobless, while the percentage for rural was 5.3%. As per the latest data released by the Ministry of Statistics and Programme Implementation, India's urban unemployment rate stood at 6.8% in the January-March quarter. Now on to private capex. Fitch says that corporates are likely to see an uptick of 10 to 12% in FY24. However, they may run into external risks and higher interest rates. So what should the priorities be going forward as the government embarks on its next year? I'm now joined by Rajiv Kumar, former Vice Chairman at the Niti Aayog, and Ratin Roy, Managing Director at the Overseas Development Organization, as well as the former member of the Prime Minister's Economic Advisory Council. Gentlemen, appreciate you joining us here on the program. Mr. Kumar, let me start by asking you, that was a very brief snapshot of some of the economic parameters that we track. But of course, there have been many other measures that have been taken, reforms like the GST, the PLI schemes, and so on and so forth. On balance, as we look at a decade now in office, and more importantly, what the road ahead should look like, what would you say have been the big highlights where you feel satisfied with the work done, but more importantly, the priorities that the government needs to focus on going forward?
Yeah, thanks, Shireen. I'm glad to be here. For me, the big highlight of the 9 years, there are a few. One is, I think, the focus on structural reforms, which have been undertaken in very difficult areas, like the implementation of the GST, the Insolvency and Bankruptcy Code, the reduction of the corporate tax rate, the sort of focus on the underprivileged by giving them all sorts of schemes, but also at the same time doing this, but retaining fiscal stability and being fiscally prudent and not letting the debt to GDP ratio go out of kilter, and at the same time, making sure that India's story remains a very positive story for the rest of the world, and in a situation where the rest of the world, the corporate world, the corporate global world is de-risking itself, making India an attractive destination for them to be here. Going forward, I think the biggest priority, in my view, must be reignite the private capital, private investment, story, to get that going in a much bigger way. It's already started. I'm glad to see that the credit growth from the commercial banks has now picked up and is now in double digits. But this has to be increased, raised much further than what if we want to achieve the rate of growth that we want to achieve. Now it's very good to say that we are the fastest growing large economy in the world. I think that deserves all the compliments that it does get. But also, I would want to emphasize that we need to go beyond our 7% or 8% rate of growth that we had achieved in the past. So I think that's for me, the single most important part is to create the environment for a much bigger investment appetite for the private sector in this economy, and to make room for them by moving out of sectors as the government has promised, except the 5 critical sectors, making room for them and evolving a new model of private-public partnership where private execution of public ideas or public policies could be the norm going forward.
Okay, Ratin Roy, let's address that issue. And, to start with, your own assessment of what you believe have been the meaningful measures taken by the government over the last 9 years. But importantly, to the point that's been raised by Rajiv Kumar, we are finally starting to see private capex return to some extent. In the words of the Chief Economic Advisor, incipient signs of private capex picking up. The hope is that we will continue to see this through the course of FY24. But look, to be fair to the government, they've done what they could. They've cut corporate tax rates. That happened pre-pandemic. Then we had to deal with 2 or 3 years of the pandemic. There have been other measures announced by the government, including PLI schemes and so on and so forth as well. So can the government really do more outside of the other point that he made on disinvestment and asset monetization to really unleash the appetite of the private sector?
Well, thank you, Shireen, for having me on the show. I'm very happy to agree with my friend Rajiv. I don't often do. But I think all the reforms that he mentioned that the Modi government, that were commenced actually by the previous government and were completed and finished by the Modi government, are valuable reforms. And they also reflected, until about 2016, I should say, the sort of spirit of bipartisanship regarding the priorities in the economy. After which I think we have seen certain challenges. First, much before the pandemic, the health of the fisc has begun to deteriorate. And it has the impact of that has been twofold. One, the government has not been able to collect revenues that would reflect the buoyancy you would expect in a growing economy. And it has had to compensate for that, not by spending less, it has done that, but also by taking away from the states. So if you look at India as a whole, what the central government has done because of this phenomenon has happened to some extent at the expense of the states. And this needs to be righted. Going forward, I'd say that's the first challenge. The second challenge, of course, is growth. And I have to be honest. If I ask the government of India, what do you think India's growth rate will be in 2026? I have no clue. No, there's no official estimate. There are figures put out about $1 trillion economies, but I don't have a growth rate, and I don't know what the structure of that growth is going to be. Is it going to come from manufacturing? Is it going to come from agriculture? So what I don't see is a forward plan, and that in a current situation where growth is extraordinarily tepid, I think is worrisome. The third problem, which is the most important problem this government will have to confront, and it has confronted, but it cannot confront it in the way it has forever, is inequality. In almost every dimension, you see economic inequality on the rise. The government intervenes. Of course it does. As Rajiv was saying, through various schemes, direct benefit transfers, etc. But those interventions do not, sort of solve for the problem that our growth process itself is not inclusive. And so then what happens is the government spends all its money essentially on compensating people. You didn't get development, you were not included in the growth process, here's a compensation. This unequalizing growth spiral has to stop. It's not just unequalizing between the rich and the not so rich. It's also a very unequal legacy we have inherited in this country in terms of regional inequality. Uttar Pradesh is poorer than Nepal. Tamil Nadu is as rich as Indonesia. Tamil Nadu has eliminated poverty. Its human development numbers, therefore, are better. Everything is better, but Uttar Pradesh is not. But the political power rests in Uttar Pradesh, which is naturally, they're more populous. This is going to be a big road bump going ahead, and the government had better watch out that it does not disrupt the political economy that would allow for stable and inclusive growth in the country. So I'd say my number one priority for this government, any government that wins the next election going forward, is inclusion, inclusion, inclusion.
I will address those issues that you raised of inclusion, of unequal growth as well with Rajiv Kumar in a second. But my colleague Sonal Bhutra is standing by with an update on some of the government's flagship schemes, including the affordable housing scheme as well as the free LPG connection scheme for below poverty line households. Sonal, give us a status check on how things have panned out for both these marquee schemes.
Let's put spotlight on Pradhan Mantri Ujjwala Yojana. It was launched back in 2016, May of 2016 that is, and it was aimed at providing LPG connections to women below the poverty line. There was another scheme which was replacing this particular scheme, that was Ujjwala Yojana 2.0 in 2021. These schemes aimed at releasing 8 crore LPG connections. Now, if we look at the numbers, the recent data that is available on the website, total connections released under Pradhan Mantri Ujjwala Yojana is 9.5 crore. And total connections released under Ujjwala 2.0 is 1.6 crores. So definitely it has surpassed those targets. It's more than 11 crore connections in terms of LPG connections across rural households. That's about the Ujjwala Yojana. The other one is Awas Yojana. That's Pradhan Mantri Awas Yojana. It was launched back in June 2015 and it was aimed at providing affordable housing for urban poor, lower income group and rural poor as well. In terms of the outlay in budget, in the recent budget, the outlay was increased by 66% to 79,000 crore rupees. There are two schemes here. Pradhan Mantri Awas Yojana Urban. The second one is Pradhan Mantri Awas Yojana Gramin. So I looked for some data, and the ones for the urban area is the one that I'll be talking about right now. As on 29 May, this is some provisional data available on the website. The demand is for 1.12 crore houses, out of which they have sanctioned 1.2 crore houses. They've completed 74.51 lakh homes under this particular Yojana. In terms of financial progress, they have committed 2.01 lakh crore rupees for this particular urban Yojana, out of which they've released around 74% of the funds, 1.45 lakh crore rupees. The expenditure done so far is 1.37 lakh crore rupees. Now, they've also received the utilization certificate for 1.37 crore in terms of the amount that has been spent. Utilization certificate is something that is done across schemes, how much has been utilized so far. Now, beneficiaries under the credit linked subsidy scheme, where the government would be providing loans at a subsidized rate, that is where in the economically weaker section or low income group, the beneficiaries have been to the tune of 18.96 lakh. That's the population that has been positively impacted by this. And in the middle income group, it is 6.08 lakh. So this is just from the credit linked subsidy scheme that these many people have been positively impacted. They also received interest subsidy under CLSS, of course. So the interest subsidy for economically weaker section has been to the tune of 45,894 crore rupees. For the middle income group, it has been to the tune of 12,855 crore rupees. So somewhere around 58 to 59,000 crore rupees has been the subsidy that is given out under the credit link savings scheme. This is where they basically give loans at a lower amount and at a lower interest rate. So this has been the outcome so far in both these schemes.
Sonal, thanks very much. That was a quick status check on some of the key schemes of the government, the Ujjwala Yojana as well as the Awas Yojana. Rajiv Kumar, I want to come back to you and raise the issues that Ratin Roy has raised. And let's address the first one, which he talked about, and that was that whatever is being done should not come at the expense of the states. Now, this has been a cause of concern, especially with the advent of the GST and then the sunsetting on the GST compensation that states were availing of. More importantly, you have the 16th Finance Commission. Of course, that will be set up later this year. There have, of course, been concerns on devolution with the 15th Finance Commission's formula. Expectations are that, that this time around we could see some change on that front as well. How would you like to proceed on this front, especially given the concerns that have been raised by states in a GST era?
Shireen, I think it's critical to work with the states. a lot of action. All of that action is actually at now the states and not in Delhi. And I've been saying this ever since I've been in Niti Aayog and otherwise. And that what it means is that the government has actually started to do that, which is to set up state level Niti Aayogs for them to draw the development blueprint for each state, because each state of ours is a unique economic entity in its own right, and very, very large too. What Ritin has said is right. The difference between Goa and Bihar in per capita incomes is 10-1, and this is just not sustainable because we can't afford the sort of growth story that we have, which means a huge migration from the north and the east to the south and the west, because that simply can't go on. But the thing is that the 15th Finance Commission, whose recommendations this government implemented right away, had increased the devolution of the tax revenues, etc., to I think 42%, from the earlier 31%, or something like that. So now that's already been done. What you need now to do is to work with the states to ensure that their capital expenditure on infrastructure, on the facilities for the poor, on the delivery of goods and services for those at the bottom of the pyramid are all much better than what they have been before. But the second point that I would like to make is in what Ratan said about inclusion, that all these schemes, whether there are 28.5 lakh crore has been transferred through direct benefits to the underprivileged. That's a huge amount. About 460 million bank accounts being opened to facilitate that. Then you've got you just given the figures for the Ujjwala Yojana and the Awas Yojana. 110 million households, remember, of a total million, I think, of about 180 to 190 million rural households having got now the gas cylinder. These are all huge impacts for the bottom of the pyramid. In fact, when I presented the multidimensional poverty impact report in the UN General Assembly a couple of years ago, there was universal appreciation of the fact that India had been able to positively impact more than 400 million people to come out of that, to do better, to come out of the multidimensional poverty. Same is true about the Ayushman Yojana and the Jan Aushadhya. So this government of all, and I have forgotten to mention 120 million households now with piped water. All of these are real improvements in the life of the people. So, per capita income is not the only measure, for improving the welfare levels of the people. I think all of these contribute to that. And I think there the government has done exceptionally well, because it has improved the efficiency of the distribution of public goods and services and raised that bar much higher than what it has inherited from the past.
Yeah, Ratin, on that last point, in terms of the distribution of government schemes, government subsidies, etc., I think there is consensus because of the digitization program that the subsidies are getting to people who ought to get them, and the leakage has come down significantly. But going back to your point on inclusion, Mr. Kumar, raising some of these issues there, some of the government interventions there that are working, other schemes, including the Pradhan Mantri Garib Kalyan Yojana, which has now been merged with the food program, etc. If I were to ask you to prioritize what next you would like to see as the government intervenes, of course, we're hoping that growth will take care of some of these challenges and some of these concerns. But where would you like the government now to intervene? What kind of measures would you like to see?
Well, you actually gave the answer yourself. The long term, we cannot subsidize the majority of our population in perpetuity. That is a failed growth model. It's a good thing that the government is ameliorating essentially what is a massive market failure in the northern and eastern areas of our country, principally, because people there are too indigent and earn too little to do what you and I do, which is go to the market, buy a gas cylinder, and afford to buy a gas cylinder. Go to a bank, get an EMI, build a house, and afford to build a house. Far too many people outside the top 150 million, 200 million people are unable to engage as participants in the market. And in the long term, our growth has to be such that those people are able to engage and go to the market and buy the things that they want. So we need growth, but we need growth that is able to satisfy at affordable prices without subsidy in the long term, in the medium term. What people, let's say the top, 40% of the population wants. And what do they want? They want what everybody wants. We want more things. We want air conditioners. We want private cars. They want to get a square meal. They want to buy a 200 rupee shirt. They want to get an affordable house by going to the bank and getting a loan. They want good quality healthcare, good quality education. And now speaking of all of India, states and center. None of these goods that I mentioned to you are being provided to them through the market. Agriculture is subsidized and cross-subsidized to death. This shirt I'm wearing costs 3,000 rupees. It's made in India. 300 rupee shirts, the bulk of them are imported from Bangladesh and Vietnam. Housing, as your figures show, requires subsidy. We have to come up with a model where these houses are affordable. Healthcare. Again, the government is subsidizing healthcare, and that's a good thing. But we do need to come up with a better, more affordable model. And education needs to be fixed. It's pretty bad. So I'd say if the government could say that about 2/3 of my growth going forward will come from these 5 areas: home market demand, about 20% more from exports, and 20% from the stuff we consume, which is the bulk of our growth today, air conditioners, air travel, that sort of thing, then we will be on a path to sustainable, inclusive, market-driven, transformative, prosperous growth across the regions of India. So I think that is the next challenge, the next government, whatever it's you ought to take up, and I will be advocating for it and writing about it from now till the next government, whichever it might be, takes office.
Well, you're making a start here, Ratin, so that's good to hear. But Rajiv Kumar, I want to come back to you now and talk about some of the other issues that were raised there in terms of what could propel growth forward. And I know you've been a big advocate in terms of the export story. We have seen a pickup in exports, of course, currently because of the external environment. There has been a slowdown, but on exports, outside of the measures taken by the PLI schemes, some of the FTAs which continue to be work in progress, a few CEPAs that have been inked, what more would you like to see to really unleash that aspiration and ensure that we really do get to our potential in this environment of de-risking of supply chains and so on and so forth?
Yeah, Shireen, great question, and you're absolutely right. I've been an advocate of export expansion, export speeding up exports, etc., as one point answer to many of our problems. But let me just say two things or 3 things before I come to the specific measures. One, slowdown in global economy should not be used as any reason for a slowdown in our exports. This is the time when we can expand our exports and should try and expand the share in global markets, grab a greater market share rather than increase our exports only when the going is good, because that's what we've done in the past. That's just simply not good enough. We've got to act now. That's the first thing. The second point is that all our export industries, except for petroleum exports, which I shouldn't actually even count as a part of our exports, and this is what the government should do, which is to put out data which always says export minus oil exports. All the rest are labor-intensive industries, which means that they generate employment, skilled employment in different parts of the country, and that's the second big plus point for exports which need to go. And the third thing about exports is that exports can be diversified across all the sectors of the economy, and I give just one example as to why can't we become a major agro exporter, especially if we switch to more natural farming and organic farming. Coming to the specific issues, I think what I've seen over the years is that we are still not able to work with our private investors, with our entrepreneurs, with our startups, to de-bottleneck the sort of issues that they have come about. And this requires a very strong and a very consistent partnership between the central, state, and local government, because those are where the problems are. If you talk to the exporters, they'll tell you that the problem is not in the policy as much as in getting some license or a change in land use, etc., etc. So that's the first issue, that we need much better way of working based on mutual trust between the entities that are involved in export. The second point is that we are not, our small and medium enterprises are still localized. They've not been able to become part of the global or regional production chain. Now we must know, we must go there. We should not, in some sense exult in the fact that, oh, our local enterprises are, given so many millions of mudra loans. They are not going to make us export competitive. So therefore, that's the second part. And I think we need a special effort on that to make our small and medium enterprises globally competitive. What is to be done there? How do we organize that? And the third part about our exports is that we now need to pick some industries which we think are going to be winners. Now, the PLI scheme is all very well, but I'm afraid it's now become so dissipated, if you like, and spread across so many large sectors that, we are not taking a bet. And I think, this is where I think you need to, and Sharad Sharma is the one who talks about this all the time. Every country which has gone, which has raised its market share, has taken a bet on few of the rising sectors of the economy, of the global economy. Okay, we want to do this. We will capture the market going forward in this and this sectors which you see are rising. So those bets have to be taken, and those bets have to be taken in a manner where the government and the private entrepreneur and the companies work together, agree on that bet, and then execute and implement them.
Mr. Kumar, I haven't seen Ratin Roy vigorously nod his head in agreement so often on a program as he is this evening. Ratin, an unusual sight.
He's a friend.
Well, I have to say that while I agree with everything Rajiv said, I know Mahatma Gandhi is not popular nowadays, or as popular as he was. But I want to say two things. I think we're concluding soon. One, I believe for all my life, I agree with everything Rajiv said. Exports, like Mahatma Gandhi said about Western civilization, would be a very good idea. And 70 years after independence, and of course Rajiv is right, we are sitting with a global share in global exports of less than 2%. The second thing I want to say is don't, for any incoming government, fix the sociology. A society that has turned on itself and displays conspicuous violence within its borders and displays sort of, if you like, competitive violence within groups of people, whether it is caste, ethnicity, religion, has never in the history of the world been a successful transformative economy.
Right. Well, gentlemen, I have just a minute or so to go, but I want to go across to my colleague Vivek Iyer. He's been standing by with the details on the Pradhan Mantri Gram Sadak Yojana as well, one of the big programs of the government. Vivek, take us through the status check on the Rural Road Connectivity Scheme.
Well, the scheme that we are highlighting is the Pradhan Mantri Gram Sadak Yojana. Now, this particular scheme, as the name suggests, is the Rural Road Connectivity Scheme, which is a 100% centrally sponsored scheme. It was launched by the government to provide connectivity to unconnected habitations. In fact, this particular scheme also, under its ambit, involves policy development and planning to ensure management of the rural roads networks. Now, the total completed length since the inception of the scheme is quite staggering. In fact, over 7 lakh kilometers is what this particular scheme, the roads have actually been constructed. Now, what Nomura has to say is that, Nomura says that 82% of the total expenditure of the Ministry of the Rural Development is for this particular scheme, that is the Pradhan Mantri Gram Sadak Yojana. And in fact, this particular scheme actually has been one of the highlights of this particular regime so far as well.
Vivek, many thanks for joining us. Rajiv Kumar, final say to you, physical infrastructure or digital infrastructure, which do you believe has been the bigger success story of this government? Because they've prioritized both.
No,
so this is probably going to be a hard one.
Both, Shireen, both. And I club them under connectivity. This government has taken an amazing steps in improving connectivity in the economy. And that connectivity is completely class and sector or regiment agnostic, and therefore has helped everybody. But let me just say one thing, which is that I think we now need to have a different approach towards public-private partnership. We've got to start building the trust between the different stakeholders and stop looking for those who are not doing the things they want to do, but look out for those who are doing the right things and emulate them. This is, I think, going to be the key, especially if you want to improve your shares in global markets. You have to do it in a much more collaborative, trust-based manner than you have done.
Yeah, I agree with him. You have to go easy on
10 seconds, Ratin, before we close.
I completely agree with Rajiv. Just calm down with the Enforcement Directorate and PMLA and Raid Raj. It's okay. Trust your people. The vast majority of Indians are honest, hardworking people. And, too much of this, enforcement culture actually raises suspicions that it's being done for political purposes. The less of this divisiveness we have, the faster we'll be able to grow together.
Rajiv Kumar, Ratin Roy, it's been a pleasure. Many, many thanks for joining us to take us through not what the past looks like, but more importantly, what the future should be. Appreciate your time and your insights. That's it then on this special edition of the CNBC TV18 Special broadcast. Don't go anywhere. We're taking a break, but we're back with the news in a minute.